As you can see, markets coming under pressure once again. In fact, we've seen losses for 7 days running now. Are you concerned that sentiment will continue to be eroded for the NSE All Share?
Good morning. The losses we've seen over the past 7 days are expected to continue in the short term. That is largely driven by the fact that comparative to other asset classes, we've seen that the market that has done 23% up this year, obviously investors are looking to take some profit. That is largely the reason why we've seen those losses.
We've also seen bond yields rising. Have you seen a shift in terms of asset allocation over the last few days as well?
Precisely, that has been the case. For those who have been following the Nigerian fixed income markets closely, you realize that we've got real negative returns on investments in that asset class. What happened last week when the government did issue some 80 billion in bonds was there was there was a spike, there was the crash in prices, and then yields went up, largely because there was also a dearth of liquidity as a result of the delay of the injection of the allocations by government, and also some mop-up activities the week before. What that has done essentially is investors who had obviously begun to shift to equities because of the returns they were getting saw an opportunity to go and buy into lower bond prices, and much better yields. Essentially, that's what has also contributed in essence to the losses we've seen in equities.
Well, Victor, we've seen that 750 billion naira in budgetary allocations being released, and we were alluding to the fact that that is why we've been seeing a liquidity squeeze, and of course this is why we've also seen bond yields spiking. Do you see that being reversed now that the money has been released?
That has been reversed, in fact. Yesterday we saw those interbank rates, for example, come down from between 6 and 7% down to just over 1%. 750 billion naira, which is equivalent of $5 billion, is quite a lot of money. That has come into the Nigerian banking system and obviously has reduced the pressure that had emanated from a perceived lack of liquidity. It's going to remain that way going forward. We think it's going to be cyclical. Whatever there is injection by federal government, would expect such a reaction in the markets.
Looking at margin loan exposure, that's also been under the spotlight, and banks can only now have around 10% exposure to margin loans. Do you see a lot of banks taking a big knock because of this, or do you think that most banks have pretty much been in line with the regulation?
Margin lending primarily was one of the major reasons we had, the crisis we experienced last year. By September last year, in response to CBN's, direction, most of the banks had basically begun to unwind, that exposure. So we think a 10% limit that's announced by the CBN basically is supposed to serve as a guidance going forward. But our estimation is that for most of the banks, when you're looking at their direct margin loan exposure, it is significantly way below that 10% threshold. What we found is, in order to clean up their books, they've taken losses and made provisions for whatever losses they may have incurred relating to margin loans, particularly. Whatever was left on their books probably relate to things like may have been converted to asset-backed facilities, which we think for them is the way to go for yet. We still think that we need some time to understand the implication of this 10% limit and how basically that is going to play out. But on a general note, I think in our estimation that this will not particularly impact the banks significantly.
Victor, we know that there's quite a lot of buying opportunities right now, purely because the markets have come under pressure over the last while. But for the year, we are still starting to see robust gains for the NSE All Share. Where are you finding value right now, given that we have seen a bit of a sell-off?
Yeah, in fact, starting with the banking sector, which obviously still is largely the major driver of the index. Looking at certain stocks, for example, you look at the UBA, you look at the Zenith, trading at 11 and 13 naira respectively, the GTB at 16 naira. For us, those present buying opportunities. If you go to other sectors, maybe not so cheap on the valuation angle. You look at maybe consumer goods. Some stocks obviously will still present themselves in those sectors, but I think for me largely the value gains clearly stands to be the banking sector.